Have you ever stopped to really think about how invoices are changing, the language, the format?
It's moving fast.
It really is, because for businesses operating in or even just with the UAE, that whole digital future of finance, it's not just coming, it's basically knocking on the door, ready to become the standard.
Mm-hmm.
Welcome to the Deep Dive. Today, we're really getting into the weeds of the UAE's upcoming e-invoicing framework. And let's be clear, this isn't just some, minor update.
Not at all. It's a huge digital transformation. It changes how businesses will handle their money matters, fundamentally.
Right. So for this deep dive, where did we pull our info from?
Yeah, so we've looked at a whole bunch of common questions and answers floating around about invoicing. Plus, there's this really insightful article, UAE Invoicing, Unlocking the Future of Finance.
Okay.
And our goal really is just to give you a clear, straightforward understanding of what this system is, how it works day to day, and maybe most importantly, what you actually need to do to get ready.
Okay, sounds good. Let's unpack this then. So right at the core of it all is this thing called a decentralized five-corner model. Now, decentralized, that word jumps out. What does that actually mean for a business? Like, how is it different from, say, other countries where everything just goes straight to one government website?
That's a great point. Decentralized here basically means it avoids having one single point where everything could potentially fail. It allows the system to grow more easily, scale up, and it encourages competition, innovation among these accredited service providers, the ASPs.
Right, the ASP.
Which means businesses get more choice, maybe better service. It's designed for both sending the invoice efficiently and reporting it.
And these ASPs, you mentioned them, they sound absolutely crucial. I mean, beyond just checking boxes and sending data off, how pivotal are they really? Could they become more like, strategic partners?
Yeah.
Helping with more than just compliance, maybe even offering insights from all that data?
Absolutely. That's the potential. Think of them as the essential go-betweens between your business and the Federal Tax Authority, the FTA, and the Ministry of Finance, the MO.
Oh.
So when you create an invoice, your ASP does two key things. First, they check every single data field against the official UAE data dictionary before it even gets exchanged on the PEPL network.
Okay. Crucial step.
Exactly. Then second, they report all the necessary tax data fields to the FTA system. That's quarter 5 we mentioned.
Gotcha.
And yeah, only an accredited ASP can do both of these mandatory steps. And yes, longer term, they could definitely become more strategic using that clean, structured data for analytics, maybe even helping optimize finances.
Okay, so connecting this back to the model, these corners, let's map them out. Corner 1 is the seller, that's your business maybe. Corner 2 is your ASP, the seller's one. Corner 3 is the buyer's ASP. Corner 4 is the buyer, your customer. And corner 5, like you said, is the FTA or MOFA system.
That's the map.
Now, the way they talk to each other, the connections, it sounds like some are regulated, some aren't. Between the business and their ASP, corner 1 and 2 and 3 and 4, that's kind of up to them, right? APIs, web stuff, file transfers.
Exactly. The MOF and FTA don't dictate how you connect to your chosen ASP. That's a commercial arrangement. It could be APIs, web portals, SFTP, whatever works.
But the communication between the ASPs and from the ASP to the FTA, that's different.
That's where the standard comes in, yes. The link between corner 2 and corner 3, so seller's ASP, a buyer's ASP, and the reporting link from corner 2 to corner 5, the FTA, both use the PEPL AS4 protocol.
PEPL. Okay, can you give us like a quick analogy? What is PEPL in this whole thing for those of us not deep in the tech specs?
Sure. Think of PEPL as like a super secure, standardized international postal service, but for electronic business documents.
Okay, I like that.
It makes sure that no matter where an e-invoice is going, if both sides are on the network, it gets there securely and everyone can read the format. It guarantees that standard secure transfer.
Makes sense.
And importantly, your business doesn't need to worry about talking directly to the UAE PEPL authority. Your ASP manages all that PEPL network stuff for you.
That definitely clarifies the structure. So we know how invoices will move. Now let's talk about who this actually applies to. What's the mandatory scope? Any surprises there?
Okay, so broadly speaking, it covers all business-to-business B2B and business-to-government B2G transactions.
Right.
And this applies whether the businesses involved are registered for VAT or not. That's quite wide.
Okay, so VAT status doesn't matter for B2B or B2G. What's out then?
Business-to-consumer, B2C, transactions are currently outside the mandatory scope.
Okay, so retail is mostly unaffected for now.
For the mandatory reporting part, yes. Now, a business could choose to process B2C invoices through the network, but those specific ones won't be reported up to Corner 5, the FTA.
Oh.
So yeah, retail dealing mainly with consumers isn't directly impacted by this mandate right now.
Okay. What about self-billing? That always seems to add a layer of complexity. How does the UAE system handle that?
Yeah, self-billing is interesting. In these cases, it's the buyer, the customer, who actually creates the invoice.
The buyer creates it.
Okay. They then exchange it with the seller, and importantly, they also report it to the FTA using their accredited service provider.
Right.
It's key to remember this is about the buyer being authorized to issue the invoice. It's not the same as, say, the reverse charge mechanism itself. The challenge for businesses might be making sure the buyer's systems are ready to generate and report these correctly.
Understood. And what about imports? Bringing in goods or services from abroad? You mentioned the MOF can't force foreign vendors onto the system.
Exactly.
So how does that work for the UAE business receiving that invoice? Does it create any extra headaches for them?
Not really. In terms of invoicing obligations, invoices you receive from foreign suppliers don't need to go through the UAE invoicing network. And there's no extra duty on the UAE taxpayer to report these specific import transactions via this system. Even if your foreign supplier happens to use PEPL somewhere else, the UAE's specific rules in data dictionary can't be forced on them for their invoice to you. Reporting isn't mandated for those imports.
Okay, so that simplifies things a bit on the import side. Fascinating. All right, let's shift from who's in to how it actually works, the nitty-gritty, integration, exchange.
Yeah.
You mentioned near real time.
Yes. The proposal is for integration between businesses and their ASPs to be near real time.
And the format, are we talking PDFs? Do we need QR codes on everything?
No, this is a big one. Invoices are exchanged between the seller and buyer purely in XML format.
XML only.
XML only. Absolutely no PDFs involved in the official exchange.
Yeah.
And no requirement for QR codes on the invoices themselves.
Wow, okay.
The XML file itself will be encrypted, following standard security protocols.
And how much data are we talking?
There are 50 mandatory fields.
50, okay.
Yeah, 50. All of them have to be provided by the seller to their ASP. How exactly you share those fields, the technical method, that's something you agree on with your specific ASP.
50 fields. That sounds like a significant data mapping task for a lot of companies. I can just picture finance teams thinking, could we get all 50? Good to know about the format, though. What about language? English? Arabic? Both?
English. E-invoicing should be in English. Arabic is not mandatory for this.
Okay, English it is.
And another detail, even if it's an immediate payment, like cashed on the spot, you still have to put a payment due date. It'll just be the same as the invoice date in that case.
Right, makes sense. And how are businesses identified?
Using the tax identification number, the TIN. That's the first 10 digits of the company's tax registration number, TRN.
Okay. What if a business doesn't have a TRN?
They'll need to register with the FTA to get a TIN specifically for this. Even, say, a sole establishment that's registered as a natural person for tax. If their contract is with another business, it's treated as B2B for invoicing. They'll need a TIN.
That leads us nicely into some of the finer points, the nuances. VAT groups always seem to add complexity.
Okay.
What should businesses in a VAT group know?
Yeah, VAT groups have specific rules here. Each individual company within the VAT group needs its own endpoint, set up via a UAE accredited service provider.
So not just one endpoint for the whole group?
No, each member needs one. While the invoice might use the group's main TRN, the specific endpoint details used for sending or receiving must belong to the actual group member doing the transaction.
Okay.
And each member company will also get its own unique TIN. That's their identifier on the invoices, distinct from the group TRN. So internal systems and VAT groups need to track things at the individual member level for invoicing.
Right, that's a key setup point.
Yeah.
Now, errors, they happen. You mentioned this no cancellation rule. That feels like a really big shift.
It is a huge one.
What kind of challenges might that create? Like if there's a dispute or the buyer only accepts part of an invoice, does it force a whole new level of financial discipline?
It absolutely does. This is critical. The only way to correct an error on a tax invoice that's already been processed through the system is by issuing a credit note.
Well, a credit note, wow.
Yep. There is no concept of just canceling an invoice once it's in the flow. This even applies if a buyer partially rejects an invoice for commercial reasons.
So you can't just delete it and start again?
Nope. It forces extreme accuracy up front. You had to get it right the first time, ideally, or Manage corrections through a separate, trackable credit note transaction.
Yeah.
Your internal controls need to be really tight.
What if the ASP spots the error first?
Well, if the ASP finds an error during their validation before exchange, they'll reject it back to the issuer, to you. So it won't even get to the buyer or the FTA with that error.
Okay, so there's a check there. Does the FTA system, Corner 5, also do checks?
Yes, Corner 5 also performs what's called schematron validation. It's basically the same kind of automated check that Corners 2 and 3, the ASPs, do.
Like a grammar check for invoices.
Exactly. Making sure it follows all the rules, formats, mandatory fields laid out in the UAE data dictionary. It's rigorous. If Corner 5 finds an issue, a message goes back to the relevant ASPs, Corner 2 or 3. And this validation is also near real time.
Okay, but the buyer, they can still reject an invoice for other reasons, like if the goods are wrong?
Oh, absolutely. A buyer can reject an invoice based on commercial reasons, wrong goods, wrong price agreed, that sort of thing.
Right.
They just can't reject it based on a technical validation failure that should have been caught by the ASPs or the FTA system.
Right, that makes sense. What about practical issues, like internet going down?
Good question. The ASPs are expected to have systems in place to handle that. They should be able to store the invoice information securely if your connection is down, and then send or report it once everything's back online. Provide some resilience.
That is reassuring. Okay, what about exports? Sending invoices to buyers outside the UAE. How does that work if they aren't part of this whole UAE system?
Right, so if your foreign buyer happens to already be on the PEPL network somewhere in the world, you can use their existing PEPL endpoint for a direct electronic exchange.
Okay, neat.
But if the foreign buyer is not on PEPL, which will be common, a sort of dummy endpoint will be used in the UAE system for record keeping. The actual document exchange won't happen via PEPL in that case.
So how does the buyer get the invoice?
You, the seller, would need to send it to them through other means, like email, the old-fashioned way.
Okay.
But critically, your ASP, Corner 2, still has to report that export invoice data to Corner 5, the FTA system. The overseas buyer doesn't need to sign up with a UAE ASP or anything like that.
Got it. So reporting still happens, even if the exchange is manual? This all sounds like a pretty massive project for businesses. Is it all happening at once? A big bang?
No, definitely not a big bang. That would be chaotic.
Yeah, I can imagine.
The plan is for a phased implementation. Businesses will be brought into the system in stages with plenty of advance notice for each stage. The exact timeline and details of the rollout will be announced later.
Okay, phased is good. What happens during the transition?
During the transition period for each phase, both the old ways and the new invoicing method might be acceptable. So you'll need to keep records carefully. But once invoicing becomes mandatory for your business, that will be the only way to handle those in-scope invoices.
Right. The sole mechanism. So what should businesses be doing now? What are the key first steps to prepare?
First big step. Get familiar with your own transaction data and invoicing processes. Once the official data dictionary is published, you need to analyze your data against it. See where the gaps are. That data mapping is critical.
Okay, data first.
Then, keep an eye out for when the Ministry of Finance publishes the list of accredited service providers, the ASPs. Once that list is out, you need to choose one, make a commercial deal with them, and then start the real work of integrating your internal systems, ERP, accounting software, whatever you use to talk to the ASP system.
Integration. That sounds like a project in itself. What about point-of-sale systems?
Yes, if you have B2B transactions happening at a POS, those systems will need integration too for the invoices that fall into scope.
Okay. And these ASPs, when do we expect to see that first list? And how do we know they're, up to scratch?
The list will come out in due course, is the official line. It'll be after the main legislation is finalized and the accreditation process is fully set up. As for quality, the MOV will be keeping a close eye on them. Continuous checks, periodic audits, making sure they stick to the standards. That oversight is key for trust in the whole system.
Definitely. Okay, last area then. Data management, compliance, things like how long to keep records, where data is stored, any big changes there.
Generally, it aligns with existing rules. Data retention is still 7 years for invoice data, consistent with current tax law.
7 years.
Archiving requirements also follow existing VAT laws. For data residency, there aren't new general rules beyond what the law already says.
But some sectors might have specifics.
Exactly. Sectors like banking or healthcare might have their own stricter data residency rules. That's something you'd need to discuss specifically with potential ASPs to ensure they can comply.
And can ASPs use cloud solutions?
Yes, cloud implementations are allowed, provided they comply with things like the UAE National Cloud Security Policy.
And data protection overall?
Businesses, the taxpayers, need to follow whatever data protection and security standards apply to their sector. The ASPs themselves have their own set of data protection guidelines they must follow, established by the UAE PEPL Authority.
Wow. Okay. This has been incredibly thorough, a real deep dive into the UAE's invoicing framework. It's so clear this is more than just a tech upgrade. It's a strategic shift for the whole economy here.
It really is.
Yeah.
Towards efficiency, transparency, a truly digital way of doing business.
The role of those ASPs, the absolute need for accuracy, because you can't just cancel invoices, and knowing it's a phased rollout, those feel like the really big takeaways for me.
Definitely key points.
Right.
And it leads to a final thought, perhaps. As the UAE moves to this future where invoicing isn't just nice to have, but the standard, what other processes inside your own organization right now might be ready for a similar digital transformation? Where else can you get ahead of the curve?